It's time now for On the Radar. We're back with our co-host, John O'Connell, Chairman and CEO, Davis Rea. John, you've got a few picks for us today in the tech sector. Let's start with your first one, Meta.
Yeah, listen, we own Meta. We're optimistic about Meta. I'm not saying it's necessarily a buy. What I was actually really saying was, going back to our previous discussion, that Meta's been growing like crazy. It trades at a pretty reasonable valuation. It's going around 25%, trading at around 21 times, 22 times earnings. So a market multiple. It's spending massive sums of money on building out its AI infrastructure, its data centers, like everybody else is. It's being innovative. It's driving innovation. It's spent a lot of money hiring people to try to advance its agenda. But like Netflix and like Canada, it's got to attract attention, it's got to attract eyeballs, and it's getting to be a very, very competitive world. And I think what a lot of people aren't thinking about is that the innovation that's taking place, this technological disruption, it brings vast opportunities for companies like Meta, and they've been capitalizing on it for sure. And we own it, and we're optimistic about it. I do worry that new forms of entertainment could develop that could be disruptive for Meta's bottom line. So, while everybody's really excited about AI, and we are too, we just are a little bit worried that people are thinking only about the optimistic components of AI and not necessarily considering the downsides, that it could be very disruptive. You go back to 1999 and you look at the number of companies that survived the last major innovation when the internet was really being developed, and it's pretty scary. And today people are very optimistic about things, but I think there's good reason to be concerned that these companies have to make these major investments to be able to stay relevant to consumers.
Right. It's interesting, too, in that conversation, the downside and the way you bring up that, too, about AI. Well, let's say with it, and because your stock number 2 pick is Google, and OpenAI's, new, their browser that they have come out with, too, possibly threatening Google Chrome. What are our thoughts?
Yeah, OpenAI and Sam Altman are wonderfully proficient at promoting themselves, and they've got a wonderful product. They also make a lot of pretty startling comments. And, I think it was about a year and a half ago that OpenAI was talking about its relationship with Bing, which is, I think, the number 2 browser in the world. And it really didn't have any major impact. So, Google is being very aggressive in rolling out its AI product, Gemini, and it's got a video generation capacity, just like OpenAI has released with Sora. Google has such a massive entrenched user base, and you need to really offer, I think, more than just gadgets and ways to amuse yourself making funny videos to really change consumer behavior and stop them from being able to stop them from using Google's products, particularly when Google offers really a pretty compelling, good product itself. And I think a lot of people don't realize that OpenAI uses Google's data to try to get everything. I mean, it sources Google. So this idea that Google's going to take over a browser is really admitting that they don't have enough intimate data about its users yet. And so the browser is an attempt to become as robust a feature or information source for them as Google already has. So, like Meta, we own it. We're optimistic. We think it's trading at reasonable prices, but there is a very aggressive competitor out there. And as long as Google, Meta, Amazon, Microsoft keep giving money to NVIDIA, and then NVIDIA keeps giving the money back to OpenAI, we're living in a very interesting world.
I was going to say, yeah, it's, keeping a close eye clearly on it. You talked on, you just touched on your number 3 pick, Amazon, too, and the growth. Talk a little bit about the growth rate and why this is on your radar.
Yeah, Amazon's trading the cheapest it ever has on all kinds of metrics. And the investment industry is focused, it's always focused on one thing. It's monosyllabic in many respects. And AWS, their cloud computer serving business, is the largest in the world. They were the ones that really started the industry. And what we're seeing now is people are focused laser focused on whether AWS is going to grow at 18% or 18.5%, and does it grow at 19%? And people are worried that there are new entrants to the world that are building data centers like crazy. So you have more competitors. The issue is, does the overall pie grow as bigger, and what portion of that pie is consumed by Amazon? And the dilemma is, and the interesting fact of the matter is that there's a massive overbuilding of data centers, probably. People aren't thinking about whether we actually start being able to do AI locally on our devices. It's not always going to be in the cloud. Amazon's going to invest probably $150 billion this year in infrastructure, not just for data centers and everything, but it does have the customers, whereas the other people don't have the customers. They're trying to get the customers. Their customers are pretty narrowly focused, oftentimes OpenAI. And where's OpenAI getting the money? It's getting the money from NVIDIA, who gives them the money so that then they can then give the money back to NVIDIA to buy their chips. So I really do believe that there are risks that Amazon is exposed to. I think the risks are mostly investor sentiment and overemphasizing one aspect of their industry, of the business, and de-emphasizing or ignoring or not thinking about the durability of the franchise that they have, and are more excited by the shiny objects like CoreWeave that are stick.